Good afternoon, all of you. Hope you all are doing good. May blessings be upon you all. Welcome to Commerce second year class. Yesterday, we had completed the topic consignment and we did problems based on cost price method. Today, we are going to take up consignment with invoice price method. Okay, so let us first get to know what is this invoice price method. See, suppose the value of goods consigned by the consignor is, let us say, 10,000 rupees. Okay, this is the cost price of the goods sent by consignor A to B, right? Sometimes the consignor does not want the consignee to know what is the actual profit he is making. So what he does is, where the cost of the goods is 10,000, he will charge some extra amount on that. He will charge some extra percentage on that, let us say 20,000. So he will add 22,000 to this. Okay, 10,000 into 20 by 20%, that is 2,000. He is adding excess price and is showing the goods to be of 12,000. What is the actual cost? It is 10,000. He is adding some excess amount, like say 2,000, and is sending the goods at 12,000. So in this case, cost price is 10,000. He is adding excess value, no? That is called as loading. And 12,000 is called as the pro forma invoice price. This is the price he is quoting in the invoice, right? Where the actual cost is 10,000, he is showing it as to be of 12,000. So we will be doing, so there is a little difference in treatment. There is no much difference, only a little difference in the treatment while writing the consignment account. Okay, so we'll be taking up questions based on this. What method we are doing? We are doing invoice price method, right? And this 2,000 excess amount is called as loading. Okay, so we'll directly take one question based on invoice price method. Page number 82, question number 11. Manasvi of Medak consigned 50 boxes of medicine to Vedangna of LRD. The cost of each box is 800 and invoice price is 1,000. Okay, so I said there is a little difference, that's all. Number of boxes, how many? Number of boxes, say 50. Cost price, 800. Invoice price, 1,000. So what is the loading per box? Per each box, what is the excess amount? 200, right? Now let us see how we give an effect to this in consignment account. I am preparing consignment account in the books of consignor who happens to be Manasvi. Okay, Manasvi is the consignor. Right? So when it is a case of invoice price, what does the consignor do? Consignor will first debit consignment account to goods sent on consignment. To goods sent on consignment, he will first show it at invoice price. He'll first show it at invoice price. Right? What is the cost price? Given in the question, 800. What is the invoice price? 1,000. So first, he will debit consignment account with invoice price. Okay, this is the invoice price. Now, what is the cost price? 800. So what is the loading amount? Loading amount is 50 cases into 200. 1000 minus 800, that is 200. So 50 into 2, 10,000. This is the excess amount, no? That he will immediately remove, he will immediately eliminate by writing by GST 10,000. Now try to understand here. He is debiting consignment account with 50,000. He is debiting it with 50,000 and crediting it with 10,000. 50 minus 10, that is the net effect, which happens to be 40,000. See, what is the cost price? 800. So 50 into 800 would be 40,000, no? So this is how we arrive at the cost price. I repeat, if it is a case of invoice, first consignment account is debited with invoice price, right? And the excess amount that is charged will be eliminated by crediting consignment account with the loading amount. Okay, the rest of the problem will be same. The rest of the problem, expenses, commission, all these things will be same. Then, Manasvi paid 2,500 for forwarding goods. Okay, so 2,500 are the expenses of consignor, isn't it? Remember, we take 4 items on the debit side to cash. Expenses of consignor. Then to consignee. What is the name? This tongue twister. Vedagna. Vedagna. Okay. This is for the expenses of consignee. Again, Vedagna. This is for the commission of consignee. And then credit side, we write again Vedagna. This is for sales. And then we write consignment stock. Okay, this is a standard format, no? We have been following all these days. 4 on the debit side and 2 on the credit side. Here, there is the addition of this one, right? Okay, so now let us take what are the expenses of consignor, that is Manasvi, 2,500. 2,500 are the expenses paid by consignor, Manasvi. Then Vedagna sent advance of 25,000. This advance amount given by consignee will appear in consignee account. Okay, take a note of this. Yesterday also I told you, advance paid by Vedagna will appear in the ledger account of Vedagna. It will not have any effect in consignment account. It will appear only in consignee's ledger account. Okay, next. Vedagna sent an account sale with the details showing 40 boxes at the rate of 1,000 each. See, what are the total number of boxes consigned? 50. How many are sold? 40. At what price? 1,000. So 40 into 1,000, 40,000 are the total sales. 40,000 are the total sales. At what price? 1,000 rupees. Okay, so see, out of 50 boxes, if 40 are sold, 10 are unsold. So we have to do the valuation of unsold stock, right? Then what is the commission paid? Commission payable is 1,500. So we'll take that here. What are the expenses incurred by Vedagna? Selling expenses are 1,000 and commission is 1,500. Now, very important thing what we have to do, that is the valuation of consignment stock. Why am I saying that it is important? Sir, we have been doing it in all the problems based on unsold stock, no? But here, when it is a case of invoice, we have to do the valuation of unsold stock twice. I repeat, when it is a case of invoice method, we have to do the valuation twice. Okay, how you see? First, we have to do the valuation at invoice price. Valuation of consignment stock. Valuation of consignment stock at invoice price. If it is a cost price method, we'll do directly on cost price. If it is a cost price method, we do the valuation directly on cost price. But here it is a case of invoice price method, so we have to do the valuation twice. Now, out of 50, 40 boxes are sold, 10 are unsold. So first we have to take invoice price of 10 boxes. right? Invoice price of 10 boxes. That would be 10 into what is the invoice price of each 1,000? So 10,000. 10,000 is the invoice price of 10 boxes. Okay. Then to this, we add proportionate expenses of consignor. Add proportionate non-recurring expenses of consignor. What are the total expenses of consignor given? It is 2,500. How do we add? Yesterday I told you one formula, no? Unsold stock by total stock into total non-recurring expenses. If the units are given, we have to apply this formula. If proportion is given, then we can directly take 1/5. Like if it is 350 sold, we can take 2/5 of the total expenses. Proportion we can directly take. But if units are given, as in this case, then it is good to apply this formula and calculate the proportionate expenses of consignor and consignee. What is the unsold stock? 10. What is the total stock? 50. Into what are the expenses of consignor? 2,500. So how much it will be? Paisa. Similarly, we have to add the expenses of consignee also. But then again, when we take the expenses of consignee or consignor, we add only what expenses? We add only non-recurring expenses. In this case, the expenses of consignee are given as selling expenses. Selling expenses are a recurring expense. So we will ignore. We will not take it. So what is the value of consignment? It is 10,500. Okay. What is the value of consignment? It is 10,500. This I have to write here. This I have to write here as 10,500. Right? Remember that I said in case of invoice, we have to do the valuation twice. We did it at first instance at what price? Invoice price. Again, we have to do the valuation. Valuation of, consignment stock. Valuation of consignment stock at cost price now we have to do. So, cost price of 10 boxes. It would be 10 into what is the cost of each box? 800. So that is 8,000. Add proportionate non-recurring expenses of consignor. Apply the same formula. Unsold stock by total stock into total expenses of the consignor. This would come to 8,500. See. Pay attention. In case of invoice price method, valuation of unsold stock is done twice. Once it is valued at invoice price and the value arrived at will be credited to consignment account. It will be shown on the credit side of consignment account. Then again, the valuation has to be done at cost price. How much it is? 8,500. Now, what we do is we calculate stock reserve. Okay, it is called as consignment stock reserve. Consignment stock reserve is 10,500 minus 8,500. It is 2,000. This 2,000 is the excess loading in consignment stock. 2,000 is the excess loading in consignment stock. See, let us again go back to our first step. When the goods are sent at invoice, I have first debited consignment account with invoice value 50,000. Then I have immediately eliminated the excess amount. No, 10,000 was the excess price. I have immediately removed it. In the same manner, in my closing stock, there is an excess amount of 2,000, which I have to remove by debiting consignment account with consignment stock reserve account. Consignment stock reserve account. It is 2,000. Okay. See, what are we doing in case of invoice price method? We first debit consignment account with the total invoice value. Then whatever excess is there, we are removing. Similarly, we are doing the valuation of unsold stock at invoice price. We are crediting it to consignment account. Then again, we are doing it at cost price, and the difference amount we are debiting to consignment account. See, this is loading in the unsold stock. This is, let us say, loading in the opening stock. Okay, both we have removed by transferring them or by writing them on the opposite side, right? Okay, now let us balance this. Let us balance this. 10, 50, 60,500, 60,500. Okay, credit side total is 60,500. And then debit side total is 52, 53, 54, 55,000. Okay, 4, yeah, 55, 57,000. So we have consignment profit of 3,500 because we'll transfer it to profit and loss. Right? This is a little different from the normal cost price problems what we do. Where is the change? The change is only in, let us say, the stocks and opening stock and the closing stock. And go through the valuation once. Valuation is done twice. Once at the invoice price, and that is taken to the credit side of consignment account. Again at the cost price, and the difference is taken to the debit side of consignment account. Okay. Then we prepare consignee account, which is normal. Okay, which is normal. Like we do the same way we prepare consignee account. Who is consignee? Vedagna. Consignee account is prepared directly copying from consignment account only. See, wherever Vedagna, Vedagna, Vedagna is there, those entries will come on the opposite side in Vedagna account. So I'll take to consignment. The entry, this was appearing on the credit side of consignment account. Here I'll take on the debit side as 40,000. Then again, consignment account. These are the expenses entry, 1,000. Again, by consignment, this is the commission payable entry. These two entries were there on the debit side, and this was there on the credit side of consignment account. And one entry, advance entry, I'll write by bank. Vedagna has sent 25,000 rupees advance, which I said will appear only in Vedagna account. Here I gave a note for that. Advance paid by Vedagna will appear in the Vedagna's ledger. It will not appear in consignment account. It will appear only in consignee's account. So now I have taken it in consignee account. Okay. Now let us see what is the balance. Let us balance and see what is the figure. What is the amount Vedagna has to send to Manasvi now? Debit side total is 40. This is 40. 40 minus 25, 26, 27,200. 40,000 minus 27,500. It is 12,500. So this is the final amount what Vedagna would send to Manasvi. This is the amount due. Okay, done. Now, goods sent on consignment. In goods sent on consignment account, there will be a little change. There will be a little change. We have to take into consideration what you see. There is a little change in what are we preparing? We are preparing Goods sent on consignment, the last account. Okay. This is our goods sent on consignment account. Goods sent on consignment account. Right. Now let us again go back to our consignment account. In consignment account, you see, we have GST on the debit side and we have goods sent on consignment on the credit side. Goods sent on consignment account is appearing both on the debit side and credit side of our consignment account. So in goods sent on consignment account also, this both will appear on the opposite side, like by consignment, the amount which was debited to consignment account 50,000, and then to consignment account, the excess loading which was credited to consignment account. So 50 minus 10, that is 40,000, which is the actual cost of consignment. This will be transferred to trading account. So remember, note, always actual cost of consignment. Always actual cost of consignment will be transferred to trading account. Whether it is cost price method or invoice price method, what do we transfer to trading account? It is the cost price only. In the problem what we solved, invoice price was 50, but that 50 was invoice price having a excess loading of 10. That we will remove, eliminate, and we transfer 40,000 to our general trading account. Okay. Chalo, done. Then we'll take one more problem based on invoice price method. I'm taking question number Ragamani of coaching 200 pieces further fastest that. It is same, but let us do 12th one. Question number 12, page number 82. Ragamai of Kochi. Ragamai of Cochin consigned 200 cases of Ayurvedic medicines to Sri Charani of Hyderabad. So who is the consigner? Ragamai. And who is the consignee? Sri Charani. The cost of each case is 400, but invoiced at 500. So what is the loading? 100 rupees per case. Ragamai paid 1200 towards packing and cartage. Sri Charani informed that through an account sale that 180 cases are sold at 520 each. So 20 cases are still unsold. Expenses paid by Sri Charani were freight 800 and commission has to be calculated 5% on sales. Okay. So we'll take question number 12. We'll take question number 12, page number 82. Let us first draw the format for consignment account. Consignment account. As I told you, consignment account, what was our standard ratio? 4:2, no? 4:2. So consignment account is first debited with goods sent on consignment at invoice price. Then expenses incurred by consigner. Then expenses incurred by consignee. What is the name of consignee? Sri Charani. Okay, Sri Charani. Then commission payable to Sri Charani. Then credit side by Sri Charani. This is for the sales made. And by consignment stock. Normally, we used to take this in our cost price method, 4:2. Here there is addition of two more entries, right? We have to take by GST on the credit side. This is with the loading amount, the excess price. And then here we have to take stock reserve, that is the excess loading in unsold stock. Okay, so let us begin. See, what is the number of cases? The number of cases are 200. The cost is 400. Invoice at 500. Number of cases are 200. Cost price is 4 and it is invoiced at 500. So excess loading is 100 per case. So first we'll take like this. How many cases? 200. What is the invoice price? 500. Okay, 2 5s are 10. So it is 1 lakh. It is 1 lakh. Then what is the excess price in each case? 100. 100 rupees into 200 cases, it will be 20,000. Isn't it? See, if you calculate invoice price, 200 cases into 500, it is 1 lakh. If you calculate cost price, 200 cases into 400, 80,000. 1 lakh minus 80,000, that is 20,000. This is the loading. That is what I have done. Okay. That is what I took here, you see. Isn't it? Okay. Then, hope this is clear. Invoice price on the debit side and the excess amount called as loading on the credit side. Now, what are the expenses incurred by consignor? The expenses incurred by consignor, Ragamai, are Ragamai paid 200 toward packing and carriage, just 200 rupees. Only 200 rupees. And the expense, and Sri Charni informed through account sale that 180 cases are sold for 520 each. So what is the total sales made by Sri Charni? Out of 500 cases, out of 200 cases, 180 cases are sold. What is the total number of cases? 200. 180 are sold at 520 each. So what is the total sales value? Okay. What is the total sales value? Multiply. $93,600. 93,600. Okay, once again we'll check. 2 8 the 6 1 2 1 the 2 3 5 the 40 0 4 5 1 0 5 4 9. Yeah. So what is the total sale value? 93,600. Okay, 180 cases at the rate of 520, it is 93,600. And what are the expenses incurred by Sri Charni? That is a consignee, 800. And the nature is also given as freight. Freight is a non-recurring expense. So in this case, we have expenses incurred by consignor also non-recurring, and the expenses incurred by consignee also are non-recurring. So both these expenses are to be taken into consideration at the time of unsold stock valuation. Then commission is allowed at 5% on sales. So how do we take commission, you see? Commission is 5% on 93,600. Commission is always calculated on sales. So how much it would be? 4 the 6 the 12, 8 the. Okay, 4,680 rupees. This is the sales amount. 5 6 the 30 0 3 46. Yeah. Wow. Go through the calculation. See, now a very important part left, that is valuation of unsold stock and what is the value of stock reserve. So as we did in the last problem, we have to do the valuation of unsold stock twice. Once at the invoice price and then once again at the cost price. So first we will do the valuation at invoice price. Okay, what is the invoice price? 500. So we'll do. And what is the unsold stock? 200 minus 180. Unsold stock is out of the total 200 boxes, 180 boxes are sold. So 20 boxes are unsold. We are doing the valuation of 20 boxes first at invoice price, then at cost price. First at invoice price, then at cost price. Okay. So now valuation of consignment stock, valuation of consignment stock at invoice price, at invoice price. So let us take invoice price of 20 boxes. That is 20 into, what is the invoice price? 500. Okay. What is the invoice price? It was 500. So 20 into 500, that is 10,000. Then add proportionate non-recurring expenses of consignor. If units are given, how do we take? Unsold by total. Unsold are 20, total are 200. So 20 by 200 into the expenses of consignor, which happen to be 200 only. The expenses of consignor are given as 200 only. Okay. And the expenses of consignee are given as 500. So it is just 20 rupees. We got just 20 rupees. Similarly, add proportionate non-recurring expenses of consignee. I am taking consignee's expenses also because it is specified that the expenses incurred are freight, and freight are a non-recurring expense. Freight are a non-recurring expenses. Freight paid by Sri Charni is 800 rupees. Freight paid by Sri Charni is 800 rupees. So 800 rupees I'll take proportionately. Again, 20 by 200 into 800. That is 80 rupees. So what is the total? 10,100. What is this 10,100? This is the value of consignment stock at invoice price. Okay. This amount we have to take on the credit side of consignment account. We have to take on the credit side of consignment accounts, 10,100. Okay. Then again, what we have to do? We have to do the valuation once again. We have to do the valuation once again, and this time we have to do the valuation at cost price. Valuation of consignment stock. Valuation of consignment stock at cost price. Now we have to, right? So what I'll take is cost price of 20 cases. That is 20 into cost was 400. So it is 8,000. Add proportionate non-recurring, add proportionate non-recurring expenses of consignor. Take the same way, 20 by 200 into what are his expenses? 200. So you get 20. Then add proportionate non-recurring expenses of consignee. 20 by 200 into the total non-recurring expenses, 800. Okay. So that is 80 rupees. So what is the total? 8,100. Now see the difference of these two. That is called as consignment stock reserve. That is called as, we can call it as stock reserve. Stock reserve, that is 10,100 minus 8,100, which is 2,000. This 2,000 we will show on the debit side as to stock reserve. Now let us close the consignment account and see what is the profit or loss made on consignment. And that amount we have to transfer to the general P&L account of the consignment. So let us see the total. What is the total you see? 20, 93, 10, 700, 3, 9, 10. 1,23,700 on the credit side. 1,23,700 on the credit side. Debit side, 1 lakh, 1 lakh 3, 1,07,680. So 16,020 is the profit on consignment. 16,020 is the profit on consignment, but here it is 15,120. What is missing? Okay, 1200. 1200. It's a small mistake. It is not 1000, it is 1200. Okay, the expenses incurred by consignor are given as 1200. By mistake, I have taken them to be as 200. So little correction. Here it will be 1200. So 2000. This is one the tenza. It would be 120. So this would be 10,200. Okay. Again here also it would be 120. 120. So this also would be 8,200. 10,200, 8,200, it would be 2,000. This, there won't be any change here, but here this will become how much? 10,200. So this will be 800 now. I'll do again, not to get confused. I'll do again. What was the mistake? It was not a mistake actually. It was a blunder, I should say. Instead of 1200, I have taken them as 200. Okay, so that is the correction I did. Now let us check. See the total. 800, 3, 1,23,800. 1,23,800. Then 1,02,000, 1,04,000, 1,08,680. So 120, 15,120. This is the gross profit. 15,120. Sorry, this is the consignment profit. We will transfer to P&L. Hope there is no confusion now. Okay. Yeah. Let us take this page and check if anything is there. Okay, correction done. 1,200. Okay, so good. Now let us prepare consignee account. Let us prepare consignee account and then goods sent on consignment. Who is the consignee? Sri Charani. What is the name of consignee? It is Sri Charani. So we'll prepare the ledger account of Sri Charani. Invoice or cost will have no difference on consignee account. Consignee account has no effect whether the problem is based on cost price method or invoice price method. Okay, the items which were appearing on the debit side will take on the credit side. Sales we took on the credit side of consignment account. Here I'll write to consignment the total sales value which was 93,600. Then the expenses incurred by Sri Charani, how much? 800. Then the commission payable to Sri Charani. How much was the commission we got? 5% on sale. That was, sale was 93,600. The commission was 4,680. Commission was 4,680. That will take here. There is no advance, I think. See in the question if any advance is given by Sri Charani. to Ragamai? No, there is no advance amount. So we'll close this and we'll get the final amount that is payable by Sri Charani to Ragamai. So 93,600 minus how much it would be? 80, 5,480, 21, 8, 8, 88,120. This is the final amount the consignee sends to consigner. 88,120 is the final amount sent by Sri Charani, the consignee, to Ragamai, the consigner. Okay. Then, what is the last ledger we have to prepare? We have to prepare goods sent on consignment account. We have to prepare goods sent on consignment account. That I'll take here only. Done. So I am preparing goods sent on consignment account. Goods sent on consignment account. Okay. Now, again, let us go back to our consignment account and see. In consignment account, we were having GSC on the debit side and we all were having GSC on the credit side as well. Both these have an effect in our GSC account. Debit will come on the credit side and the credit will come on the debit side. So by consignment, जो डेबिट में लिए थे हम लोग कितना लिए थे डेबिट में आई थिंक we took 1 lakh. We took 1 lakh. So that 1 lakh will come on the credit side of GST. And on the debit side also, to consignment, it is 20,000. So 1 lakh minus 20, that is 80,000 to trading account. Okay. So we transfer this to trading account. If you have seen, whatever case it is, whether it is a cost price problem or a invoice price problem, always what is the amount we send to trading account of the consignor is the cost price only. We will transfer always cost price of the goods sent on consignment to trading account. Okay. So this is how we have done 2 questions. We'll take one more question. That is question number 14. Question number 14. Reptika Reddy sent goods to Rishika Reddy of Adilabad on consignment worth rupees 30,000 and invoice price of cost plus 20. What is the cost price? What is the cost price given? If you see, cost is 30,000. And what is the loading given? It is said that 20% of cost. He gave cost plus loading. Cost plus 20%, isn't it? Cost plus 20%. Cost is 30,000 plus 20% of cost. That is 30,000. So 30,000 plus 20% of this is 6,000. So what is the invoice price? 36,000. Hope you understood this. It is 20% of cost means it is 30,000 ka 20%, which is 6,000. So invoice price is equal to cost price plus loading. Invoice price is equal to cost price plus loading. Cost is 30. Loading is 6. 30 plus 6 is 36,000. Right? This is the invoice price. This is the cost price. This is the loading amount. Okay. Then Riptika Reddy paid transport and insurance charges of 800. Rishika Reddy sent an account showing 3/4 of the goods were sold for 28,000 and sales expenses 700. She sent a draft after deducting a commission of 5%. So we'll prepare consignment account. We are preparing consignment account in the books of consignor, that is Ritika Reddy. What are the items we take? We take GST at invoice price. We take cash, expenses of consignor. We take consignee, expenses of consignee. The name is Rishika Reddy. So consignee's name is Rishika. Then again Rishika, this is for the commission. Rishika. Then again by Rishika, this is for the sales. And then consignment stock. Okay. Then two more will come. We'll see later. As of now, what is the invoice price? We have done the calculations. I have shown you here that invoice price is 36,000. And how did we arrive at that? That also we have seen. Cost plus loading. So here I'll take 36,000. What is the loading amount in this? Yeah, it is 6,000. That we will remove, we eliminate by crediting consignment account with same GST. What are the expenses paid by consignor Ritika? Those are 800 for insurance and transport. That will take on the debit side. What are the expenses incurred by consignee? Consignee incurred an expense of 700. What are the sales made by consignee? 28,000. 3/4 stock is sold for rupees 28,000. 3/4 stock. So 1/4 is still unsold. 1/4 is still unsold. That is our consignment stock. We'll do the valuation of that. Then what is the commission? Commission is given as 5%. As you know, commission is always calculated on sales. 28,000, 5% would be 1,400. Okay. Now let us do the valuation. Valuation, I'll show on this page only. As you know, valuation we have to do twice. Valuation we have to do twice. First at the invoice price. So that is what I am doing. Valuation of consignment stock at invoice price. First do the valuation at invoice price. Proportion is given. When proportion is given, it would be very easy. When units are given, no, 50 boxes, 20 cases, it may be a little difficult. But when proportion is given, it is very easy. What is the proportion sold? 3/4. What is the unsold proportion? 1/4. So invoice price of 1/4 stock. That would be 1/4 into what is the invoice price of total? 36,000. So 9,000. 1/4 stock of 1/4 of the total invoice price 36,000 is 9,000. Add proportionate non-recurring expenses of consignor. Consignor expenses are 800. Transport and insurance, they are non-recurring. So 1/4 of 800 is 200. Expenses of consignee I will not take here because those expenses are given as sales expenses and sales expenses are recurring in nature. So I'll take 9,200 as my consignment stock at invoice price. Then again what I have to do? I have to do the valuation once again at cost price. Valuation of unsold stock or consignment stock at cost price. So what I'll do is cost price of 1/4 stock. That would be 1/4 into what is the actual cost? It is 30,000. 1/4 of 30,000. How much it would be? 7,500. add proportionate non-recurring expenses of consignor, that is 1/4 of 800, 200. So add these to 11,700. Go through the valuation once. Check the valuation. We did the valuation twice, once at the cost price, and we arrived at 9,200. Then again at the cost price, we arrived at 7,700. So now we have to ascertain stock reserve, that is 9,200 minus 7,700, which is 1,500. That will write here. Okay, so we are done with. Now let us check the profit or loss on consignment. What is the profit or loss on consignment? See the credit side total 34, 43,200. 43,200. Okay. Then what is the debit side total? 36,8, 37,5, 38,5, 38,5, 40. So 41. Sorry. 8 plus 15, 15 plus 5, 2. So 36, 37,5, 38,5, 40,400 I'm getting. So 2,800 is the profit on consignment, which we will transfer to P&L account. Okay. 2,800 is the profit on consignment. Okay. Then what is left? Consignee account and goods sent on consignment. Consignee account and goods sent on consignment account. So I'll close consignee account here. Who is consignee? The name of consignee is Rishika. So I'm preparing Rishika account. We don't have to take any extra pains. We'll prepare it by looking at the consignment account only. If any advance is there, that we'll capture here. Otherwise, every entry we take in consignee account will come from consignment account only. To consignment, that was, this entry was there on the credit side of consignment account for sales, 28,000. By consignment, this entry was there on the debit side of consignment for expenses. Again, by consignment, this entry was there on the debit side for commission. Balance it. 28,000 minus 2,100. It would be 26,800, I think. 74,149. It is 26,900. 25,900. This is the final amount sent by consignee. What is this? It is 25,009. Okay. Then we have to prepare goods sent on consignment account. The last lecture. This is our goods sent on consignment account. Okay. Goods sent on consignment account. Go through consignment account. Here you see we are having GST both on the debit side and credit side. GST both on the debit side and credit side. So it will have contra effect by consignment. I will take the cost. What was the cost? What was the cost? 56,000. Then again, to consignment, I'll take the loading 6,000. So the difference 30,000 is transferred to trading account. So 36,000, 56,000. Okay, this is how we are done with the third problem and the last problem of consignment. Okay, so here I'll conclude today's session. We'll continue tomorrow, the same time. Good day, take care, bye. वो वर्ड ले लो आप